All right, this is trade number 2. This one was actually from the week prior that I entered it, and I closed it the same day I entered the play on Blink Charging. This is a play on Activision Blizzard. The setup style is a mean reversion. This has been beaten down a lot due to bad PR, sexual harassment allegations. Well, not even allegations. I think it's full on proven at this point that there was misconduct that the company needs to address. That in conjunction with some, I believe, some delays on certain games and, overall like employee walkouts and a lot of shaky things going on. The stock got beat down. So let's look at the daily chart because that's where you're going to get the real feel for it. As you can see here, we were, cruising between, where am I at? I got arrows. I want price level. We were cruising between upper 80s and even upper 90s for quite a while. A little bit of a breakout here, but it pulled back in not too long later and stayed in this range. And then you can see, I want to say around here is where those allegations started coming out, and they started getting bad PR, and this and that and the other thing, and lawsuit, and California fining them, and all that. So then you have this big gap down, just from cruising up here. The next day it opens, boom, way down here. That's like what is that? That's like a 14-point drop overnight. That's very significant. And I've noticed a couple times when I see that, a lot of times stocks will act kind of like a rubber band, so to speak. Now, I think with this play, you're better off waiting longer than I did in hindsight. Now, I should be very clear here. I did get lucky and catch close to the bottom. But in hindsight, I think it's much safer to wait for a consolidation period. Give it a week, give it several days to a week to consolidate and see if it's actually going to find support here where it kind of did. It found support right in here. This one that I just drew right there. But you don't know that, for all I know, I could have gotten in this, which I had a pretty tight stop on it. My stop was this yellow line that's right below the blue line, which once again, the blue line is always my entry. And my take profit was this green line up here. Now, ideally, what I wanted to see on this was more continuation of this. Now, if we go back to the initial chart I had here, which was the 15-minute, we can see, so here, this circle right here was my entry. It dipped way down this morning, and then if we go to, I think it's clearer on the 5-minute actually. So we'll go to the 5-minute. So here's the day I entered. And I entered here initially, I want to say with 150 shares, I believe it was. And then right here in this little circle, I added another 50. Which my initial entry was at just over 40. I think 42. I just remember my cost basis was 47. I believe. No, it must have been 52 because I adjusted the line. So that being said, so I entered here, I added here, blue line was my cost basis. And then I felt really comfortable holding this because I held this for several days. Let's see. God damn it, I keep unplugging my headset. Idiot. Okay, back at it. I held this for several days, and even through this pullback and the chop, I felt pretty good. Now, towards the top of this channel, I could have exited, but I was liking what I was seeing overall. So I didn't. I stayed in it, and I had that day where I said I could have exited. I was sitting on about $500 profit. Now, I closed this trade for about $340 profit. As you can see this day, I don't know why the chart looks so... Oh, there we go. This day, right here where the blue arrow is, I closed the trade. It was pulling back, and the tape was making me a little nervous. Now, most of all, the reasoning for getting out of this was, like I said before, with blink charging, and right after I closed this trade, like not even 20 minutes, not even 10 minutes later, I don't think, I entered the trade on blink charging because I was watching it on one of my other monitors. And people were focused other places of the market. You know, there was a lot more volume. There was a lot better story. There was a lot better, you know, there was a lot more compelling of an argument to focus on other places with the infrastructure bill. So I wanted to be out of this since it didn't have the volume and the velocity that I was looking for. So what I did is I told myself, if the volume and the tape looks really nice on this pop, I'll hold for a bit. Well, as you can see, it popped right in here. The tape got real shaky. As you can see right there, there's a lot of red from the current trading that's going on. But the tape started to flash with just a whole row of red, just red on red, you know. And then I was like, oh, okay, it just hit its 200 EMA and it's looking that shaky. And as this candle pulled back, I sat in it for just a second. This candle started, popped a little bit. The tape flashed red. I flattened the trade, got out, sold at the market, didn't worry about sitting on the ask or anything. And then as you can see, that was a good choice because I would have been sitting on this and, you know, I'd still to this very second be green on it, but I'd be less green, missing better opportunities, and it'd be kind of a waste of time, you know, to have my capital deployed here when there's better opportunities in the market. So that's kind of my trade review for that one. It was an attempt at a mean reversion. The mean reversion was entered a bit early, didn't have the velocity that I wanted. And yet again, as I said on blink charging, this is a play that I might get back into. Maybe we'll see this base out right here. We're seeing it kind of bounce right there right now. Let's look at the 1 day, 1 minute. Yeah, we're seeing it kind of bounce right there right now, you know. And although that's above where I entered last time, if it's shown heavy support there, then maybe it warrants getting back into and shooting for my old profit target once again, which is kind of in the middle of the gap fill. I didn't want to be greedy. I wanted to, you know, get some profit and get out. Really, I think the proper price target would be the actual gap fill to like one of the old lows, which would have been like mid-low 70s would have been ideal, but playing it safe, you know, we'll see. But that being said, that's my breakdown on that one. It was an attempt at a mean reversion. It looked good for a few days. Got a little shaky. Given news that came out, it made the play less attractive. The tape started to look less attractive. Closed the trade. Green on it for $340, which was like, what is that? That's like 3%, 4%, something, but that's irrelevant. As long as I can make a couple hundred a day or something, I'm usually pretty satisfied. Overall, I actually liked, although the profit was like half, I felt better about my execution on this trade than I did on my blink charging trade, just because there were multiple signs that told me to get out of the blink charging play, and I could have pretty much had double the profit that I took away, and I had hope that it would act differently. And I've said this to other friends of mine that are traders. If hope is ever a part of your trading plan, you've already messed up. And I didn't follow my own advice, and I messed up, you know. So overall, if I were to rate this, say, on execution and theory out of 10, or on thesis and execution out of 10, I'd give it maybe a 6, something like that. I'd give my blink charging play like a 3. So not too bad. See if we can find anything to get into today. As of right now, I'm sitting flat. And yeah, hopefully I'll find something today or tomorrow, and I'll be making another one of these recaps.